Good morning and good morning Europe and good afternoon Asia. Thank you for joining us today for this important webinar on the evolving of the political landscape in France and its implication for the financial market. So I'm Théophile Legrand, a rate strategist focused on Europe, and I'm joined today with by my colleague Hadrien Camatte, which is in charge, a European economist in charge of France. Today, we will discuss the recent developments surrounding the surge of the political risk in France, particularly in the light of the Prime Minister announcement earlier this week regarding a confidence vote in the Parliament. Of course, we will explore the potential consequences of this vote scheduled for September 8th and what does it mean for investors and the broader economy. So starting directly, I would like to turn to Hadrien for his insight. Like what Hadrien, so the Prime Minister has announced that he will be seeking a confidence vote in the Parliament. What did happen on Monday actually? So what are also the set for the key vote on September 8th?
Hi everyone, and thanks Théophile for this question. So just before starting, I just want to remind you that there will be a replay, and if you have any question, do not hesitate to ask some question in the Q&A session that you can find in the Teams application. So what did happen? As you mentioned, Théophile, Prime Minister François Bayrou, surprisingly, because this is clearly a surprise, announced during a press conference earlier this week that he will deliver a general policy speech on September 8 under Article 49.1 of the Constitution, and I will be back on this point a bit later. So this speech will address the government's responsibilities during an extraordinary session of Parliament. So that's not something very common. And the confidence vote will focus on the question of controlling our public finances and validating the principle of a 44 billion budget savings plan.
And what scenarios? So what can François Bayrou survive to this confidence vote?
Yeah, that's an excellent question, and frankly, this appears unlikely for him to survive to this confidence vote for two reasons. First, due to the reaction of the opposition parties, and I will be back on this point, and second, due to the specificities of the confidence vote, because a confidence vote is different from a no confidence vote, and once again, I will be back on this point. So let's start with the reaction from opposition parties. As you know, François Bayrou is leading a government which is a minority government. So opposition parties have the majority with more than 350 seats for a majority threshold at 287 seats. So that means that they have the majority, and then they have already indicated that they will not support the Prime Minister. So when we are looking into details, on the left side of the spectrum, we have La France Insoumise, the Greens, the Communists, who have stated that they will vote to bring down the government, to clearly vote against François Bayrou. And Olivier Faure, the leader of the Socialist Party, also indicated that his party will not support François Bayrou. So that means either voting against or an abstention, but in any case, that's not something very positive. And on the other side of the spectrum, of the political spectrum, Marine Le Pen, who is chair of the National Rally Group in the National Assembly, also announced that her party will vote against the Prime Minister, a decision that was also confirmed by their allies from the UDR. And other smaller parties, including Lyot, also suggested they are likely to vote against the Prime Minister. So you have, let's say, all opposition parties who won't give their confidence to who won't vote in favor of the Prime Minister. So that's very clear reaction from opposition parties. And the second thing, it's and let's turn a bit to some constitutional law, as there is a big difference between a confidence vote and a no confidence vote, and this matters to assess the chance of the PM to survive the vote, because a no confidence vote requires an absolute majority of the members of the National Assembly. That means 287 seats, which is the threshold of the absolute majority. So here it's for a no confidence vote. For a confidence vote, you only requires a simple majority of the votes cast. I repeat, simple majority of the vote cast. And it's super important because that means that abstention does not count. And I would remind you that it was the abstention of the socialist MPs that made it possible to adopt the 25 budget. That means also that you need fewer votes to dismiss the government. And that's why no prime minister since 22 has asked for a confidence vote after the general policy speech. So if the government does not obtain the confidence vote, the confidence of the National Assembly, the Prime Minister, François Bayrou, must submit its resignation and his government will fall. That's Article 50 of the Constitution. So you have just right now understood, I think, that the government chance of survival are very low, due first to the reaction of the oppositions, and second, due to the specificity of this vote.
And thank you, Hadrien. And what scenarios follow government collapse exactly? And what also scenarios for the budget overall?
Yeah, so should the government fall, we believe new snap elections are the most likely scenario and the most likely outcome, given the difficulty of governing with only a relative majority. It was super difficult, and we see that we have many prime ministers during, several prime ministers during the last year, Barnier, we got no Bayrou, but we see that it's quite complicated to govern with only a relative majority. However, there is no guarantee that an absolute majority will emerge at the end of a new election. So most likely outcome, snap election, but no guarantee to have an absolute majority. So that's the problem with this outcome. Other scenarios, of course, are possible. We can imagine that President Macron will seek to appoint a new prime minister without new snap election, but we think that negotiation will look very, very difficult, not to say impossible, even under the assumption of a technical government or with some openness to some other political parties. So if negotiations fail, or at least stall, the current governments could manage current affairs for an extended period of time. And I just remind you that Gabriel Attal's, the Prime Minister, just before the snap election, managed current affairs for 51 days, which was a record since the Fourth Republic. I won't discuss other tail risk scenarios, but of course, among these tail risk scenarios, Macron's resignation is one of them. But I will not be surprised. So for me, it's just tail risk scenario, and I won't elaborate on it. But I will not be surprised if some opposition parties call for him to resign. Regarding the budget, frankly, that's quite difficult to discern a favorable scenario for the adoption of a 26 budget by year end, should the government collapse, given the time needed to organize first snap election and time needed to form a new government, as well as the usual deadline for the budgetary procedures. I just remind that the Parliament has, in the law, a period of 70 days to examine the draft finance law in accordance with Article 47 of the Constitution. So that means that if a budget is not submitted to the Parliament before the 7th of October, or before quite early in October, the deadlines won't be respected, and of course that's a big risk to have a budget, not to say that that's impossible. However, and I think it's a good news, at the end of 24, we show that French institutions are quite resilient, as the government managed to adopt a special finance bill that prevents a shutdown. And this special finance bill was adopted very easily. So I think it's very important to remind it. And this special finance bill will look like quite a blank year. That means no new expenditures. And that also that discretionary expenditures may be suspended. So that's a form of consolidation. But of course, the problem is that even if you have some small consolidation in the short term, it does not enable the government to tackle the public deficit and the public debt problem over the medium run.
And so you just described the scenarios for the budget and the consequences. What about the broader French economy? Well, so will the government's collapse put the GDP growth at risk this year or next year?
Yeah, that's also a good question. As you know, GDP growth will be lower in 25 than in 24. We expect growth at 0.6, 0.7 for this year after 1.1 in 24. And we think that political uncertainty clearly weighed on GDP growth for this year. And of course, if we have to see a new period of political uncertainty, we are pretty sure that it will have a negative impact on growth, particularly on the corporate investment channel, because when you have uncertainties, you postpone and you cancel your investment, but also on household confidence and through the channel of private consumption and also employment, because of course, in case of no budget, some companies could be reluctant to process to new hirings. Just to have a to be back to last year, just after the announcement of Snap election in June 24, it resulted in a decline in the INSEE Business Climate Index by three points between June and July 24, and this decline only partially recovered in the following months. So clearly, of course, an extended period of political uncertainties will weigh on GDP. Hard to see by how much, but let's say 0.2, 0.3 could be the magnitude order according to recent studies, for example, from the think tank, the French think tank OFC in France.
And what about so we have seen over the past few days, but also over the past few months, that the IMF could be interesting in working with France, or I say that France could be under the IMF. We have seen a lot of news about that. What are your thoughts between the noise and, I mean, the facts? What are your thoughts on that?
Yeah, so of course you all know Emily in Paris, and frankly, I don't think that we will see IMF in Paris. So just to see what is true and what is not. First of all, we have to be clear regarding the situation, and of course, the public finance situation must be tackled. First, regardless of the future government, the French public debt will increase at least until 2029 and above 120% of GDP, and compared to 113% at the end of 24, according to our simulations. And we also estimate that a deficit stabilizing debt is around 3% of GDP, compared to a public deficit of 5.8 in 24, and expected to reach 5.5% this year, according to our calculation, and 5.4 by the government. So definitely, the situation remains serious and must be tackled. But as the IMF's chief economist Pierre-Olivier Gourin-Chasse pointed out in the press recently, and I frankly fully agree with him, the question of France's financial independence could arise only if nothing is done to change the trajectory of public debt. But, and I quote him, but neither tomorrow nor after tomorrow. And I think it's super important. So of course, if nothing is done in the coming years, of course something can happen, but that can happen in every country. But as Pierre-Olivier Gourin-Chasse POG said, neither tomorrow nor after tomorrow. And I just want to add a quick word on it, because even if France is on a downward trajectory regarding ratings, France's rating remains close to the best grades. And France is not the only European country facing political difficulties. And for example, regarding Spain, Spain has shown that a country can do very well without a budget. And since 2016, and the Spanish budget has been fully rolled 4 times and voted 6 months late in 2 times, as my colleague Jesus Castillo with Economist for Spain likes to point out very regularly. So just to sum up regarding IMF, a key thing is to stay on a sustainable public debt trajectory path, and this starts with the stabilization of the public debt, and that means, of course, reducing the public deficit and improving the primary deficit balance.
Thank you, Hadrien. Just before the last question, we can remind you that you can use the chat for posting your questions. So do not hesitate to post your question on the chat. So you have been describing briefly the last part of the first part of the last question. France is already rated. The rating of France is at AA minus. There are, of course, some risk to have a single A plus this year or next year. So what about the implications for rating agency and the consequences of this rise, the resurgence of the political risk?
Yeah, we have this question very often in the recent months. And as you said, by the end of the year, it will be marked by the revision of French sovereign rating by the 4 major rating agencies. That is with Fitch on September 12th. And as you remind, France is ranked AA minus with negative outlook for all agencies except for Moody's, which has a stable outlook. So the first, why is France on negative outlook? France is on negative outlook for 2 reasons. First, a deterioration of its French public finances and political uncertainties. When we are looking at the macro outlook, frankly, this is broadly in line with the government's forecast and with the scenarios made by the ratings agency. That is to say that GDP growth will be close to 0.7% for this year, and public deficit is still on track to be close to 5.4 or 5.5% for this year. Of course, there are some risks, notably, for example, for public finance regarding VAT incomes revenues, in a context where private consumption is far below government's forecasts, and to be fully honest, also below our own expectations. So that means less private consumptions, less VAT income revenues, and of course that matters for public finances. So regarding the macro outlook, I think there is no reason to downgrade the country. Of course, regarding political uncertainties, a prolonged period of political uncertainties, as I said, would prove that minorities government and minorities coalitions in France are not working, while the country is still benefiting from one of the best scores in terms of quality of its institution in the rating agency score. So that means that the real issue is that the lack of a budget and extended period of political uncertainties would put the public finance trajectory at risk. And of course, it could lead rating agency to downwardly adjust their public deficit target and debt scenarios, and thus lead them to downgrade the country this year or early next year, of course, depending on the outcome of the vote, and depending also on the public debt trajectory of France. Last word on it. Of course, that's not a good news. However, French ratings remains excellent, and the quality of the French signature remains very high.
Thank you, Hadrien.
Maybe on bank, as we have a lot of questions regarding implication of ratings for banks. Unfortunately, our colleague and bank specialist Baptiste Troyon is still on vacation, but he released a paper on this topic very recently, and I will share this paper on the chat. And the key thing to keep in mind is that a notched downgrade of France would be neutral on almost all French bank rating for S&P and Fitch, according to him. And that's not my view. That's the view of our bank analysts. But it could result in a selective downgrade for Moody's. Why Moody's? Because Moody's is the only ratings agency that still applies government support notches to some French bank. And I remind that Moody's has still the most favorable ratings for France, because it's a AA minus with stable outlook. But of course, if you're interested in this topic, just have the credit team with Thibaut Cuillère and with Baptiste Troyon, our colleagues from the credit side. So I think it's maybe a perfect transition, Théophile, for question for you regarding rates. So after the press conference of Prime Minister Bayrou, what was the market reaction and what happened to the spread?
Yes, for the spread, well, the widening pressure has been starting in mid-August, and the 10-year OAT bond spread has been widening by 10 to 15 BPs, and now trading around 70 to 80 BP. And this trend have been accelerating, has accelerated on Monday, Tuesday, and now stabilizing on today following the Prime Minister announcement. So just to give you some just to give you some difference, note that the spread reached a peak of 85 to 90 BP last December, coinciding when the government, the Barnier government fall during early December. And currently, so we have also an idiosyncratic risk index to capture the political risk in the spread, and this index is representing around 40 to 45 BPs of the 10-year spread, so which is 10 BP below the crisis peaks observed last December, so the peak of the crisis. So this overall suggests that the market is not pricing in as much political risk compared to the peak observed last year. So at this stage, the spillover also effect on is observed on other EGBs, but remains contained. And another interesting metric also to measure the market's assessment of the current political risk is the BTP OAT spread, so which is currently trading around 10 BP on the 10-year and around 20 BP for the 30-year. And this suggests that for long maturities, so which is mostly capture the credit component, investors perceive a relatively long-term similar credit risk between France and Italy, despite the rating differences, so which is 4 to 5 notches.
Yes, thanks, Théophile. And the question after that is of course, how will investors behave, and will they continue to buy French debt with the same behavior than before the press conference?
Yeah, so market behavior, so investor behavior. So the market appears to be anticipating the fall of the current government and will then start to focus on the risk to the fiscal consolidation expecting. And the next major catalyst for the spread should be for possible actions for rating agency, which may invoke political stability as a rationale for downgrading France to single A+, starting by Fitch on September 12th, as you described earlier. And since mid-2024, of course, France credit ratings have been in a decline trend with one downgrade and 2 negative outlooks, in contrast to Italy. So recent improvements, which include also 1 upgrade and 2 positive outlook. And the difference, the divergence as hating the risk aversion toward the OAT, and while enhancing investor demand for Italian debt, so BTP. So overall, Fitch may announce a downgrade of France to single A+ on September 12th, and followed by an upgrade for Italy to triple B plus the week after. So additionally, of course, the ongoing risk for a French government collapse later this year could further support the BTP outperformance versus the OAT. And looking at the OAT investor part, so French banks are already overloaded on OIT over the past 2 years, while fast money short positioning on OIT futures is expected to rise. Overall, also on real money, may also initiate some short position, and past observations indicate that foreign investors, especially Japanese accounts, have generally more risk averse. So this underlines the importance of mitigating the political risk to prevent potential sell-off. And also on the supply front, net supply is expected to rise by 31 billion by the end of this year, which is quite similar to Italy.
And so, Théophile, what is your target? Your target for the French spread, for the AT-Bund spread, if political risk continues to rise, and especially in case of fall of the government of the 8th of September?
Well, overall, we think that the current volatility on the OIT curve will stay high during the Q3 this year, which should maintain or even threaten the OAT's underperformance versus other EGBs. And if the government were to fall, the spread is likely to widen to 90 bps, as it's also be the case if rating agencies act promptly in response to the political instability. So, of course, the market will also keep an eye on the risk of fiscal slippage, so which could once again alter the debt to GDP ratio. But on the other side, we could have some factor that could mitigate the risk of spread widenings above 90 to 100 BPs compared to last year. Because what are the main differences compared to last year, which could a bit mitigate this risk? First, the fiscal slippage is already known by the markets, and which could limit the risk of negative surprise. The second argument is that Japanese investors have already significantly reduced their exposure to OATs last year. The third argument is the political premium on the French curve was already present through the year. And the last argument is that on the absolute basis, 90 VP on the OAT bond spread for a AA minus issuer is already extremely cheap. So overall, we think that there are a lot of factors that could mitigate the risk of spread widening overall. I stop here. I think we still have 4 minutes overall. So yeah, just one question about what are the risk France could find itself the least trust scenario for the sovereign debt, similar to the crisis of the British government in 2022. I don't know if Hadrien, you can take this one, or I can take this one overall.
We will just start. The least trust episode was triggered by a budget that was unfinanced. A lot of new expenses of decrease in tax, but unfinanced. So I think the least trust risk would happen in case of some programs. So you can imagine that we have a new snap election and some programs that are unfinanced or that will dramatically increase the public deficit over many years. So of course, in this scenario, in case of absolute majority for a party that pledge a lot of new expenses that are unfinanced, of course there is a risk in this case. But I think that this is the only scenario I have in mind. But maybe Théophile, you can add some elements on this.
No, of course, that's a comparison, but there are a lot of there are some similarities, but there are a lot of difference. Least trust moment was more pressure on the long end. The magnitude of the risk is not the same, but overall, we could have some comparison, but a lot of difference, especially regarding also the central bank reaction, etc., etc. Just come back to political risk. As you said, Hadrien, the adoption of the confidence votes seems less likely to get than the rejection of a non-confidence vote due to the Socialist Party abstention. In addition to the confidence votes does not lead to automatically to the adoption of the budget, whereas the rejection of non-confidence vote does. So what is then, according to you, the advantage of using the confidence votes?
Frankly, I see no advantage. For me, is that just a trick to make a decision before first a social movement that is forecast on the 10th of September, that to accelerate the timing, to keep to remain the master of the timing just before this big strike and this big social movement, and also before potential no confidence vote that would have been occurred later in the month. LFI already announced a no confidence vote by the end of September, before Prime Minister Bayrou announced this confidence vote. So I think it's just an initiative to say, okay, if we cannot agree on the program and on the amount that we need to reduce public debt over the medium run, I cannot work. I'm unable to do what is necessary to reduce the public debt trajectory. So I'm sorry, but I must observe. Despite my efforts, I can do much. So I think it's just a trick to put the political parties in front of their responsibilities. Just to say we need these efforts. If we cannot agree on these efforts, let's fight someone else because for him it's necessary efforts.
Okay, thank you. I will take the last question because it's already 10. In 2018, the widening of Italian spread quickly hit the economy, putting pressure on the five-star Lega coalition to drop their expensive budgetary proposal. Is the French economy more resilient to spread widening versus Italy? What level of OAT sell-off would bleed into the economy? Or quite difficult to answer to this question, but if I remember well, the volatility on the spread, BTP bond spread versus OAT bond spread was not the same. I mean, the pressure, especially on the BTP spread, was more around 40 to 50 BPs. Now we are talking about more 10 BPs widening pressure, 10 to 15 widening. So it's not as it won't have the same consequences on financial condition overall. And Hadrien will also end with this, but the French economy and the outlook is still resilient despite the fiscal issues that the government has to deal with. While in Italy, in 2028, there was some recession risk overall in the private sector, but also due to the widening of the BTP spread. So I think the French economy is exposed, of course, to a tightening of financial conditions due to the OAT bond spread widening. But on the other side, the private and overall, the French economy is still resilient, which could a bit mitigate the risk on that front. And I don't know if Hadrien you can complete, but I think that's the main differences between Italy and France surrounding a political risk impact on financial markets.
Yeah, and just the increase in spreads remains still not to say huge, and that's still manageable as the current level of spreads for the economy, even if of course it will be hit. So that's the first difference. And as you mentioned, the French economy is still resilient and one of the most diversified in the world. So of course we have a lot of assets to cope with the numerous headwinds that we need to face, including political instability and public finance need to improve.
Thank you overall. If you have additional questions, do not hesitate to contact us by email or by Bloomberg chart. Of course, we will be happy to answer. Or if you have a specific question surrounding a thematic, overall it could be on the market, on the France, do not hesitate also to ask your salespeople if you want to organize a one-to-one meeting. We will be happy. The whole research team will be happy to answer to your questions. So thank you to have been following this webinar, and of course we will keep you updated following this market event. Thank you and have a good day. Bye bye.
Have a good day. Thank you.